దూర విద్యా విధానంలో డాక్టర్ బిఆర్ అంబేద్కర్ ఓపెన్ యూనివర్సిటీ దేశంలోనే మొట్టమొదటి సార్వత్రిక విశ్వవిద్యాలయం. దాదాపు 2.5 దశాబ్దాలుగా దూర విద్యా విధానం ద్వారా కంప్యూటర్ కోర్సును అనుసంధానం చేస్తూ BA, BCom, BSc డిగ్రీ కోర్సులను అందిస్తోంది. పోస్ట్ గ్రాడ్యుయేషన్ స్థాయి, డిగ్రీ, డిప్లొమా స్థాయి కోర్సులను ఔత్సాహికులైన విద్యార్థులకు అందిస్తోంది. డెవలప్మెంట్ స్టడీస్లో సెంటర్ ఫర్ ఎకనామిక్స్ అండ్ సోషల్ స్టడీస్ ద్వారా MPhil, PhDతో పాటు విశ్వవిద్యాలయమే స్వయంగా దూర విద్యా విధాన అంశంపైన PhD వంటి పరిశోధన కోర్సులు ప్రవేశపెట్టింది. సుమారు 4.5 లక్షల మంది విద్యార్థులు ఈ విశ్వవిద్యాలయం నుంచి ఉన్నత విద్యావకాశాలు పొందుతున్నారు. డాక్టర్ బిఆర్ అంబేద్కర్ సార్వత్రిక విశ్వవిద్యాలయం స్థానికంగా స్వయం బోధనా పద్ధతిలో ముద్రణ రూపంలో రూపొందించిన కోర్స్ మెటీరియల్ అందిస్తోంది. కోర్స్ మెటీరియల్ అధ్యయనానికి సహకరించే విధంగా రేడియో, టెలివిజన్ పాఠ్యాంశాల ఆధారంగా కార్యక్రమాలు ప్రసారం చేస్తోంది. అధ్యయన కేంద్రాల ద్వారా ఏర్పాటు చేసే సలహా సంసర్గ తరగతులు, సైన్స్ ప్రాక్టికల్ సౌకర్యాలు విద్యార్థులకు స్వయం అధ్యయనానికి ఒక చక్కటి అవకాశం. ఇవి విద్యార్థి సమీపంలో ఉండే అధ్యయన కేంద్రం నుంచే పొందొచ్చు.
Hello viewers, a very good afternoon to all of you and welcome to the teleconference program of Dr. B.R. Ambedkar Open University. Today's session is on Indian financial system and overview. This topic has been selected from Financial Institutions and Markets course, and hence this session is more useful and relevant for the students who are doing MBA program with us with finance specialization area. Finance is one of the key factors that contribute for the economic development of any nation. We are all aware that the economic development of a country depends on the operation and growth of various sectors, maybe industrial sector or commercial sector, service sector or agricultural sector, like that different sectors. To start any activity, maybe one wants to start a business unit. They want different types of resources, which are also known as factors of production. And the most important resources are, as you are aware, it is men, money and materials. So as I just mentioned just now, money or finance is one of the most important source of production. It is one of the important factor of production, and it is a very scarce resource also. In any nation, few people may have surplus funds, that is their income is more than their expenditure, so they have some surplus which they want to save, and few others they are in need of funds. As the number of the savers and the seekers of funds is more, maybe in lakhs also, so it is very difficult to have a direct contact, direct relationship between the savers of the funds and the seekers of the funds. So some intermediation is required to collect, to mobilize, to collect the funds from the savers and give it to the seekers of the funds. By doing like that, the savings will be transformed into a productive investment. This will lead to the economic development of a nation, and if the economic development is more, then automatically the standard of living of the people will also be increased. Financial system, it may be the financial markets or the institutions, play a very important and active role in this regard. That is, they mobilize, they collect funds from the savers and they divert the funds to the productive sector, they lend these funds to the persons who are in need of the financial resources. In fact, the financial system and the economic development, there is an interlinkage between these two also. If the financial system of a country is very strong, if it can create confidence in the savers, then more number of persons will come to deposit, save their amounts, hard-earned savings. With these financial institutions, they want just to invest their resources in different schemes, and this financial system, it will use this money to lend it for different purposes, maybe for agriculture sector, maybe for production sector, commercial sector, whatever it is. And as I mentioned just now, if the savings are transformed into productive investment, that will lead to the economic development of the nation. If the country is economically developed, the standard of living will improve. If the standard of living is improved, then automatically again the income level of the public will increase. If the income level is more, again the savings will be more. If the savings are more, then again that will be converted into again productive investment. So there is a strong interlinkage between the financial system and the economic development of the nation. So what is financial system? What are the various components of financial system? What is the importance of this financial system in the economy? What are the different constituents? What are the main activities of each and every component? What are the reforms introduced by the government to regulate, to improve the functioning of the financial system? We have two eminent resource persons with us today. On my immediate left is Professor S.V. Satyanarayana. Professor Satyanarayana is a faculty member in the Department of Commerce of Osmania University, and next to him is Sri D.Satish. Satish is an associate professor in IBS Business School, ICFI. So thank you very much, first of all, Satyanarayana Garu and also Satish, for sparing your valuable time and being with us in our studios. The discussion will take place, as you know, for about 40 minutes, and after that you can start seeking clarification if you have any doubts on the topic. Please dial the numbers which I am going to announce now and seek clarification on the topic. Please confine your questions, your queries to the topic of today's session. And the phone numbers are 2703-1431, 2703-1432 and 2703-1433. And callers from outside Hyderabad, please use 040 STD code. So shall we start our discussion,
Yeah.
Professor Satyanarayana Garu and Satish? So my first question is to Professor Satyanarayana Garu. So sir, what is the definition of financial system and what are the objectives of the financial system?
So you have explained about the financial system and what purpose that the financial system serves in the country and how it helps in mobilization of savings and lending money to the needy. I will focus upon the recent changes that have taken place in the financial system pertaining to its in achieving the objectives of the financial system, while explaining the meaning and also the objectives of financial system. So as you have rightly pointed out, it creates a link, financial system creates a link between depositors and investors. So it provides a regular, smooth, efficient and cost effective mechanism to link the depositors and the investors. It includes financial institutions, financial services, financial markets and financial instruments. So all activities relating to finance and organized into a system is known as financial system.
Okay.
So it includes all the activities pertaining to finance, and when it is organized into a system, we call it financial system.
So because system itself means which integrate different activities.
Yeah.
Like
So,
the financial system also.
So as you have rightly pointed out, the important objective of financial system is to help increasing the production in the country, which is possible through capital accumulation, and all these things lead to finally economic growth. So how the financial system helps in economic growth? Let us concentrate on that for a while. So financial system encourages savings, mobilize the savings and allocate them among various activities of the economy which are very, very useful. So how, let us concentrate for a while on encouraging savings, how it encourages savings. For if you see the recent initiatives of the government in improving financial literacy among the people and bringing more number of people into the financial system through financial inclusion by making them to open bank accounts, and all these things are aimed at encouraging savings among the public. So we have so many examples where many people they do not go to banks to deposit the money into banks, and they keep the money idle with them, and so financial system has to help in encouraging the savings, and this activity is done by creating so many financial assets. For example, banks have so many varieties of deposits. Similarly, so many tangible assets, intangible assets are created in the financial system, and these assets are different from tangible assets. So financial assets, they have some special characteristics. They are easily storable because now demat format is there. You can easily store the financial assets, and they are more liquid as compared to tangible assets, and they are liquid. They can be encashed with not much difficulty. So many things so many advantages are there in financial assets, and by creating more financial assets, more variety of financial assets, we can encourage the savings among the people. That is the first most important objective of the financial system. The second most important objective is mobilization of savings. So mobilization, so people have surplus money, but that need to be mobilized. Now we are introducing so many new things. For example, we are giving licenses to new banks, and we are creating payment banks, and so many other post offices we want to convert them into banks. So mobile banking is introduced. All these things are aimed at mobilizing the savings. And the third important objective of financial system is allocation of funds among different activities of the economy. So sometimes if the government doesn't want the savings to go in or investments to go into a particular activity, so there is a mechanism to do that also. For example, in banks we have a concept called risk weightage. So by varying the risk weightage, RBI can help in RBI can see that the investments go into a particular activity, and they do not go into the activities which are not very relevant for the development of the economy.
So putting some restrictions
also. Yeah. So ultimately the efficacy of financial system is evaluated in terms of its efficiency in encouraging savings, mobilizing savings, and putting this into various economic activities of the country.
Okay, so thank you very much, sir. Mr. Satish.
Yes.
So, sir actually outlined very informatively what is financial system and what are the objectives and what are the main functions, that is mobilizing the deposits and allocating them. While responding to my question, he also mentioned a word that is capital accumulation. So, what is capital formation? What is capital accumulation?
Okay.
Is both are these concepts one and same, or is there any difference between them?
Okay. See, capital formation is something where which would help for further production in the future. So what happens there is that anything which helps to improve production sometime in the future is known as your capital formation. Generally, when you look at the balance sheet of any company also, we call something there's something called a capital on the on the left side, on the liability side of the balance sheet. Primarily this comes from equity and debt. Okay. So what happens is normal investors can either choose if they want to invest through equity or invest through debt. So ultimately, what are the companies going to do with this money? They are going to use this not for short-term purposes, not for consumption, but they are going to use it primarily for capital expenditure decisions. And all these capital expenditure decisions in the future are going to give them some returns. And why are they doing that? They are doing it because they expect that there is a market to it. So what is happening over there is that when I am investing today, I am going to see that there is going to be some sort of a return tomorrow or in the future. So when a company is trying to do that, what they are doing is they are actually making a capital. They are forming the capital, and this capital is helping them to to generate much more wealth in the future. Now, how does capital get generated? Like the first question properly answered by Sir is basically that someone has to save. Now again, saving primarily is again an abstinence. If I am not going to abstain myself from consuming something, then only I am able to save. So what is happening is I have to postpone my consumption in order to make that particular saving. Now why is that I am trying to save? I am trying to save now on what factors first. Let's see on what the savings depends on. Savings primarily depends on my income, the general in overall income in the country. If you talk about savings for the country, then the number of people who are dependent on you. Also my habits, basically there are few people who earn a lot of money but save less. There are a lot of people who earn less but also save a lot. So what is happening there is that it's all in the mindset sometimes, that some people like to save more, who are quote unquote say conservative. Some of them would like to spend. So but then I am supposed to save this particular money, and the saving also depends on what is the inducement that the government is giving. If the financial system is good, smooth, without frauds, then you see that a lot of people come forward to save. If they feel that it is risky, then not many people are going to come to save. So what is happening there is, it all depends on how how people think about the safety of these instruments. Secondly, there also has to be, like already spoken again on financial inclusion. I have some savings, but I am unable to use it because I don't know, there is no bank in my locality. So in that particular sense, what happens is there has to be financial inclusion, lot more banks, lot more regulated financial institutions have to come, so that people feel safe while they are going to save. And saving also needs to be invested. So they do invest through banks. Saving does not mean that I am going to put this money in a locker and lock it. Then again, there is no use of that savings. So the savings have to be going in for productive investments.
And return, the depositor also should receive something extra.
Yeah, so he's primarily looking at returns. He is also looking at the risk, depending on his risk appetite. People who are conservative can choose bank deposit. People who are aggressive can choose shares. He is also looking at tax, because sometimes tax plays a very important role. And finally, he is also looking at liquidity, because when he is planning to invest somewhere, he wants that money when he actually needs it. So if he is putting somewhere in a real estate, perhaps it's not very liquid. So what happens is, all these savings converted into investments is going to lead to a capital formation for a company, and that is very, very important, because unless capital is formed, business ideas don't get implemented. And if business ideas don't get implemented, ultimately there would not be any development, and if there is no development, the GDP doesn't move, and therefore the growth rates are stagnant. So capital formation plays a very important role from the industry perspective.
Yeah, thank you. So Prof.SV, will you please, while responding to my first question, that various components of this financial system or institution services like that, will you please throw some more light on the constitution of the financial system?
What are the constituents of financial system? So we have already discussed about the objectives of financial system, encouraging savings, mobilization of savings, and allocation of resources. So for this, the financial system must consist of the institutions, financial institutions. So for example, we have banks, we have non-banking financial companies, we have insurance companies. Insurance also a part of financial system. So we have special banks for the purpose of lending to housing, for example, National Housing Bank. So power finance, infrastructure finance companies are there.
Agricultural.
Some dealers are there. So discount houses are there. Merchant bankers are there. All these people, all these institutions and people, they come under financial institutions. So their important functions that they perform include mobilizing savings, and they participate in the various activities of the financial system, and they deal with so many assets, financial assets, and they generate financial instruments, and they regulate. For example, RBI is there, SEBI is there, their role is to regulate, and like that we have these financial institutions. And the second most important constituent of financial system is financial services. So they support the financial institutions. The services provided by the financial institutions are called financial services. So for example, there are asset management companies. So for like leasing companies, mutual funds, merchant bankers, portfolio managers, etc. And liability management companies, bill discounting houses, acceptance houses, etc. and stock exchanges provide some financial services, and especially as we have already mentioned, refinancing is another financial service. Like that, these are called financial services. And the third one is financial markets. Financial markets help in purchase and sale of the financial assets in the financial system. So then transfer of funds is another function of the market. Okay, and mobilization of savings also, that takes place through the financial assets, and which are again traded on financial markets. And we have another important constituent of financial system is financial instruments. So financial instruments, there are so many new instruments that have come up in the financial system, which we will discuss after a while. And most important characteristics of financial instruments include liquidity. So they must be liquid, and we must be able to generate, for example, if we need money after investing into an asset, so we must put it as a collateral security and able to get the money. That is another characteristic of the financial instruments. And transferability. So if we want money, we must be able to transfer the asset from ourselves to some other person, and transaction cost must be as less as possible. So, and provision of options must be there. Sometimes the companies provide buyback options, etc. And tax status, as Satish rightly pointed out, tax is also one of the important thing which attracts the saving. So these are the characteristics of financial instruments, and financial instruments can broadly be categorized into ownership instruments and credit instruments. Ownership instruments include shares, and credit instruments include debentures, bonds, etc. And they can also be divided based on the length, maturity period. Some are very short term, some are of medium term, and some are long term securities. And most popular financial instruments include public sector bonds and government bonds, certificate of deposits, commercial papers, commercial bills, corporate bonds, etc. So these are the four important constituents of financial system: institutions, services, markets and instruments.
So you have given a very clear picture what actually constitutes a financial system. Would you like to add anything?
Yeah, financial system also has has to ensure that the system is smooth. So what happens there is that the regulator also plays a very important role. So the regulator has to check, has to see whether there are any frauds, has to work for investor protection. So the regulator also is a very important part of the financial system. And also the government, though we say that the government is not supposed to be in the business, but the government has an overall responsibility that the financial system works well. So the government also plays a very important role, because ultimately the money supply, if you talk from the Reserve Bank point of view, controlling inflation at the same time managing economic growth is a great challenge, which central bankers around the world do. So I think apart from the typical intermediaries and others, we also have the important role of the regulator as well as the government, whose primarily responsible.
Plays a very important role, because particularly to protect the interest of the small investors, because they invest their amount, they save their amount in all these different schemes.
And anything going wrong in the financial system is reflective on the government at the end of the day.
Now Satish, I request you to explain about this banking institutions, the very first one actually. So the first category, first constitute is institutions, in which banks, non-banking insurance companies, all these they belong to the category of institutions. So I request you to explain what is meant by banking institutions and what are the specific functions. We know that they just want to collect deposits and lend it.
Primarily, according to the Banking Regulation Act 1949, banks are systems are basically individuals or companies which basically take money for the purpose of either investing or for the purpose of lending. So they can attract investment through deposits. And what is happening is they can either primarily they use this money for giving loans or advances to the companies or those who require this particular advances. So this money which is coming in, so they serve a very important role in the economy. because most of the people, especially in India, do not invest directly in the markets, nor do they have that capacity to give huge loans to companies. So what happens is banks do collect from retail investors, and they are primarily seen as safe investments. So this money is taken and then this money is given. So that's a primary loan, where the primary responsibility or the duty of a bank, where they are accepting deposits, and these deposits are going to be used to give loans or advances to the industry or those who require it. There are also some of the other roles which we can call it as non-core areas. Like for example, they also provide lockers. They do a lot of agency work, like checks. They help in transfer of funds, collection of salaries. And there are a lot of other such features which they do, like discounting of any checks or things like that. So the primary role is about deposits and advances, but they also do a lot of things. And most of the banks now, with universal banking coming up, they're also doing a lot of fee-based services. They give letter of credit. They also their investment banking divisions, now that commercial bank and investment bank have come together, they also do merchant banking services. So they are into all sorts of services. So primarily, importantly, their role from a commercial banking point of view is to take loans, to take deposits and advance it and give it as advances to the people who require it.
What are the different types of banks that are functioning in our country?
Banks, basically, if you are talking about Banking Regulation Act, there is there are commercial banks. These banks are also can be classified in different forms. One of the important classification is the private sector banks and the public sector banks. In public sector banks, you have the government owning majority. In private sector banks, again, they are classified into two. Now, public sector also has resulted because of nationalization. 1955, State Bank of India nationalized. 1959, the subsidiaries of SBI. 1969, again, major nationalization with 14 banks. And then 1980, there were around 7 banks whose deposits exceeded 200 crores. So what happens in this process is, in 1991, we've seen that there are few other banks who were there who were not nationalized. So these are the old generation private sector bank, like for example, Lakshmi Vilas Bank, Karnataka Bank, Jammu and Kashmir Bank. These are South Indian Bank, like for example. So what happens is, these are the old generation private sector banks which existed much before the liberalization. And after the liberalization came in, there was a chance for a lot of people to get in. So a lot of new banks like ICICI, HDFC, ICICI Bank, not ICICI. So HDFC Bank, and then you have Yes Bank, and recently you have Bandhan trying to go in for thing. So what is happening is, these are the other banks which have come in after the liberalization, which are called as the new generation private sector banks. Apart from that, we should not also forget the foreign banks who are who play a very important role, especially in trade finance and others, who are established in India. So primarily we have these three things: the private sector, the public sector, and the foreign banks. Foreign banks.
So thank you, sir. Professor Satyanarayana, I request you to explain the concept of these non-banking finance institutions. What are they, and what is the difference between banking and non-banking institutions?
If we take banking, the role of banking, one of the important functions of banking is accepting deposits and advancing loans to people. Then non-banking financial companies, they don't accept, they don't take savings, indulge in routine saving, mobilization of savings, etc. So they are also registered companies, and their main business is to give loans and advances, acquisition of assets, and invest in bonds, buying of bonds, securities, etc., etc. And some of the institutions whose main function is agriculture activity or industrial activity or purchase or sale of any goods, they don't come under non-banking financial companies. So the most important difference between banking company and non-banking company is that the non-banking companies, they don't accept deposits, while banking companies, they accept deposits. And some of the important non-banking companies include asset finance companies. For example, we have Shriram transport company,
Yes.
etc.,
Yeah.
which finance the trucks and all those
Yes.
things, and they indulge in leasing business, etc. And we have investment companies. So for example, we have Bajaj Finance, we have L&T Finance, etc., and so many mutual funds and all those things they are managing, and they invest in so many activities. And loan companies, and they provide finance to the people. For example, we have Muthoot Finance, which takes which gives gold loans,
Gold
etc.
loans.
And we have infrastructure finance companies, for example, Power Finance Corporation, etc. They also come under non-banking finance companies. And we have microfinance institutions. They also come under non-banking finance companies. For example, Satish mentioned about Bandhan.
Yes.
So that is a non-banking finance company which is into the financing microfinance activities. Similarly, we have SKS Microfinance. So these are the important activities of the non-banking finance companies. So as I have already pointed out, the major difference between non-banking finance company and banking company is that non-banking finance companies, they should
They
not
don't
accept
accept
deposits. So
That's
that
the main
is the main
difference.
difference. Otherwise, most of the activities which are undertaken by the non-banking finance companies are also undertaken by the banks. So strictly speaking, we cannot clearly distinguish between a banking company and a non-banking finance company, because most of the activities of banking companies and non-banking finance companies, there is some overlap.
Okay. So they are also playing, like banks or non-banking finance companies are also playing a very
important role. So there is a space for non-banking finance, because financial inclusion in India is very less. Many people, they don't have access to banking finance. So but for the services of the non-banking finance companies such as SKS or the Bandhan, many people, they would not have got finance for running their small businesses. And self-help groups, of course self-help groups are financed by banks, but microfinance is playing a very important role. And otherwise we would have depended only on money lenders for financing the small activities.
So they are penetrating more into this rural market and also semi-urban areas and providing financial assistance. Thank you. So we come to the next category, that is the financial services, the next constituent later, because that itself is actually a very important major this thing. Now we switch over to the next important component, that is financial markets. So I request Satish, what is meant by financial market and what are the constituents of this financial market?
Okay. Yeah, financial market is a pure play market, a place where one can sell his financial assets and get a price. Very important thing about financial market is it has to ensure that the price which the investor is receiving is the market determined price. He is not going to get a price which is out of a desperate sale. So some of the bonds, like corporate bonds in India, you don't get a right price because there is no active players there. So if I have 10 guys trying to sell something and only one person trying to buy it, then of course you don't discover the price. So financial markets play a very important role in price discovery, and the price discovery process is very important. Markets are supposed to be efficient because markets are supposed to have equal number of or a good number of players who are trying to buy and sell securities. Only then you can discover the right price. So financial market is a place where right price discovery, efficient price discovery happens for any of the financial instruments. Of course, you have stock exchanges where there is ample amount of liquidity. So what happens over there is you get a correct price. But you also have some OTC counters where you don't get perhaps the right price what you get. If you talk about different markets, what we have stock markets, basically the equity markets over there. So these are there where the shares are traded, and these markets would allow for transfer of ownership of shares. We also have foreign exchange market. Foreign exchange market is a place where one buys and sells foreign exchange. Then we also have a credit market. Actually, credit market is basically where someone is trying to get some loans. So the banking system and NBFCs, like just talked about, play a very important role in the credit market. You also have the bond market. Bond is where these guys are going directly into the market in order to raise. They are not going to banks, which is a credit market. So what is happening is they are going directly and raising bonds, issuing it to either FIIs or issuing it to high net worth individuals or issuing it to public. like India Infoline bonds and all these bonds. So what we have is there are abroad you also have mortgage markets. We have not yet gone into that, but we have foreign exchange market, credit market, capital market, and the bond market. These are the 4 different markets which we have here.
Okay. Prof.SV, I request you to explain the concepts of primary market and secondary market, which are very popular concepts and terms. So what is this primary and secondary market?
So the important role of a market is to bring the buyers and sellers together. So that is the most important function of any market. And in primary market, it is the first time sale of assets. For example, a company is issuing shares for the first time, or government is issuing debt for the first time to the people. So these for the initial public offering, these things are traded in the primary market. And as far as secondary market is concerned, that is a secondary market also has a role to play. So unless the asset sold by, for example, a company is selling shares, so shares have no maturity date. So the shareholder will get his money only at when the company is liquidated. If any asset is left over, then only the shareholder will get back the money. So should he keep the share till the liquidation of the company with him? So for that we need to have a secondary market.
Okay.
So secondary markets help in trading the assets which are acquired by the investors by putting his money in either equity or in debt. So secondary markets, for example stock exchanges, they play a very important role in secondary market. So they help in trading the financial assets. So primary markets are meant for creating financial assets by mobilizing the savings from public, while the secondary markets help in trading the assets which are created in the primary markets.
So both these are part and parcel of the capital market. So what is money market?
Money market is a short-term market.
Okay.
So companies, in fact, the needs of companies, governments or other institutions, they sometimes they are a function of time. So we require very money urgently. For example, banks, they require money, call money. So they have to maintain the balance between assets and liability, asset liability management. So for that we need to have a market and instruments which provide the very short term credit required by the institutions. So money market provides such instruments and provide the market for those instruments. So basically money market is a market which is a market for short term requirements of the banks, other companies and government. Whereas the capital market is a market which is which involves in trading of assets, long-term assets, such as shares and bonds or government bonds, etc.
So money market is mainly for short term and capital market is mainly for long term. Mr. Satish, I think in money market also there is different classification like organized money market and unorganized money market.
Okay.
So what are these two?
Primarily, if you are looking at something which is regulated, we call it as organized. So the most important regulator in most markets is Reserve Bank of India. So whenever you have Reserve Bank of India regulating, they have different regulations, disclosure norms, they have to report regularly. So all these we considered as an organized market.
Okay.
So banks come into that purview. Non-banking financial companies, more or less, RBI is now giving its guidelines. So wherever wherever things are regulated, we call it as an organized market. And but we should also not forget.
1 second, it seems one caller is ready. Yeah, hello. Hello.
Hello.
Hello, please tell it.
Sir, ma'am, I am from Srikakulam.
Okay.
My name is Kesam Hadri.
Okay.
I want to know about why people are now going in for private investment rather than banking in banks.
Why people are?
Why people today are going in for
Or going in for?
private investments
Okay.
rather than depositing in the nationalized bank.
Yeah, thank you. I request Prof.SV to respond.
Yeah. So sometimes it is in anticipation of higher return as compared to the bank interest rate they go, but there is risk return trade off we must think of. So those who are risk prone, those who want higher rate of return on their investment, sometimes they go for private investment, and bank investments as compared to private investments, they are less risky. Where there is less risk, there is less return. So those people who are risk averse, they go for bank deposits. That is one reason. The other reason is some people, they don't have access to banks. So particularly in remote villages where banking habits are not there, they are not accessible. People have no option except to go and keep the excess money which they have with the money lenders, and money lenders give that money to those who are in need of the money, and they play the role of bankers there, and that is the reason why they are called indigenous bankers. But with the expansion of banking into the rural areas, so the role of indigenous bankers, it is coming down, and the role of banks, it is increasing.
Would you like to add something? Yeah.
But it's very important that if before a person decides to invest in these private firms, they need to first assess their risk appetite. That's very important. Unless they feel that they are ready to take the risk, you should not put in money there. If you think that you are risk averse or you don't like risk, then it's better that you put in bank.
Okay.
Only if you think that you can take that risk, then I think you should go in for private sector, because it is quite risky, like what sir has pointed out.
I think another caller is ready. Yeah, hello.
My name is Kishore Kumar.
Yeah, please.
Small question for you, sir.
Yes, sir.
For example, if all the alcoholic drinks are banned from being drunken all over the country, what is the positive effect of the revenue on the financial system of the country? Just could you please explain on this?
Okay. Alcohol drinks, if they are banned, so what will be the impact on the revenue? Income?
So what happens is definitely the revenue for the government would decrease. Because the major chunk of most state governments of course come from sale of liquor, but the other important thing also is the money stays in it. See, like for example, if there is a certain individual who is not actually going to drink because there's a ban, so what is happening is his savings are going to increase. So there the government's income would be reduced, but what is happening is this person's income or disposable income is going to increase. So it is only going to make a difference between whether government is earning more or is it that the savings are there with the individual. So this person, that money he is going to keep it with the bank. So if he is going to give this money somewhere else, so he is going to save that money. This money is going into the banking system, which again is for productive purpose. So now the government is not getting that money, but it all depends on if the government would have got that money, what purpose would the government put there. So in reality it only affects the distribution of money, but it's not that it's going to affect the money supply in the economy.
That is one thing. The second thing is, though the government revenues may come down during the short term because of the ban on liquor, in the long term it will have so much of help to the government. For example, health expenses. So governments are spending lots of money to provide health care to the people. So once people stop drinking, so the general health of the people will improve. That will result in less investment in health, and so the government expenditure in the long run will come down if such restrictions are placed. They are helpful to the society.
Another caller is waiting. Hello.
నమస్తే అండి, మాది మార్కాపూర్ ప్రకాశం డిస్ట్రిక్ట్.
ఓకే.
నా పేరు లక్ష్మి.
ఓకే.
నేను ఎస్బీఐ 100 షేర్స్ 286.44 లో కొన్నానండి. అది 1 year హోల్డ్ చేయొచ్చా?
So would you like to? No, actually we don't give any investment advices, I think, on this program.
Yes, please confine your questions to the topic of session. What is the financial system? What are the different components? This is not an advisory board to advise on the individual investments. So if you have any questions on the topic of the discussion in general, please call us.
So let us see from a financial system point of view. Investing in shares is risky, and you might have invested in State Bank, which is basically a government owned banks, which is relatively safe compared. I'm again disclaimers, I'm not saying anything about this, but generally an equity investment, we have seen that long term investment, you are asking for 1 year period.
1 year.
If you are keeping money for a longer period of time, generally it is seen that you will be getting some sort of a return. Definitely you will not be in a negative, especially that you have chosen some blue chip company like the State Bank of India. So it is better for you to wait and watch.
No, I want to add another issue relating to the question that the caller has asked. If you see the return on investments as compared to bank deposits, the returns in stock markets are high, though because the risk is high. So if you take the average rate of return on investments in stock market for a very long period, so some studies showed that they give about 17% average rate of return over a very long period of time. So, but unfortunately in India, the people are not investing in capital markets because of the low awareness levels. So that is one of the important reasons why the government has introduced financial literacy programs to improve the literacy levels, financial literacy of the people, so that they will also participate in the process of mobilization of savings for industrial activity, and so that people will invest in shares, debentures, etc. etc.
I think another caller is ready. Yeah, hello. Hello.
Hello, ma'am.
Yeah, please.
Ma'am.
Please tell us what's your question.
I want to know now from your people that why people have been now spending more money on realty sector rather than spending or investing money in the banks.
Sir, just now we told that.
So you have raised an issue pertaining to the thing. As I have already pointed out,
yes,
reality sector is a physical asset. So you are seeing the asset. In financial sector, the assets are intangible, and many people they do not know the relative merits and demerits of the various types of assets. So financial assets, they have their own advantages, and sometimes they are much superior to the physical assets. But unless we create awareness among the people about the merits of the financial assets, it will be very difficult to make the people to invest in financial assets.
That's what actually you have been telling, financial literacy, the people.
That is one reason, and the second reason is in the absence of any worthwhile alternative investment strategy, people go for investment in gold, real estate, etc. If they have alternative, they will definitely go for the other category of assets also.
Yeah, we left the thing where you are asking about the unorganized sector. So there the indigenous bankers play a very important role. We have communities like Jains and Marwadis where their lending happens among themselves. These are basically the unorganized sector where the Reserve Bank of India does not actually involve. So unorganized sector runs on trust.
Sir, it seems another caller is ready. Hello.
Good morning, ma'am.
Yeah, good afternoon. Tell us.
Sir, madam, I want to know just about the doubt why banks are maintaining CRR in RBI, because RBI does not give any interest on that.
CRR. Yeah, thank you.
No, it is the purpose of
capital reserve ratio.
It is the purpose of liquidity. If the banks give the entire money which they have, which they collect from the people for lend them, so liquidity is affected. That is one reason, and the second reason is RBI has a clear cut policy. So it is one of the instruments of
Credit
control.
Credit control.
So if the liquidity is more in the system, RBI will increase CRR. If the liquidity is less, they will decrease the CRR. So that is another one. But CRR nowadays it has not very much relevant, and mostly the RBI is concentrating on SLR, repo rate, reverse repo rate, etc. for control of money. So it is one of the liquidity management things.
Okay. Yeah. Okay, sir. Now let us go to the next issue, that is the instruments of money market. I request Prof.SV, what are there are so many instruments.
So
we just request you to explain briefly,
very,
because
very,
I think
very,
the
very,
time is we are running short of time.
So very briefly I will explain about the money instruments.
Yeah.
So again the instruments depend upon the type of market.
Yeah.
So as Satish pointed out earlier, we have several constituents of several parts of money financial markets. So one is money market, another one is capital market. Within the money market we have call money market and etc. So depending upon the so the instruments, the money market instruments can be broadly divided into call money market instruments, and there are treasury bills which are issued by the government of India. So call money means I have explained while answering one of the questions posed by you. So call money is the money which is required by the banks or some corporates for a very, very short term needs. So for that we have a market, and we also have commercial papers, and they are in the nature of bills of exchange, and we have certificate of deposits which are issued by the banks, and they are issued to high net worth individuals or corporates. And we also have commercial as I already mentioned, commercial bills.
Yeah.
The most important feature of any money market instrument is liquidity, safety, and then discount pricing. So most of the money market instruments follow the discount pricing model. So the instrument is issued at a discount, and the full value of the instrument is paid to the investor at the time of liquidating the instrument.
So call money market or treasury bills, certificate of deposit, all these are the instruments of money market. So what are the unique features of our Indian money market, Mr. Satish?
Yeah, money market in India has developed over a period of time. If you look at money market, it is fairly liquid. Again, money market instruments differs from, for government, for example, issues.
Satish, 1 second, I think one caller is ready. Yeah. Hello.
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 Yes, ma'am. I am U. Ramakrishna from Mumbai.
Okay.
I want to know your question, madam.
Yeah, please.
Madam. Hello.
Yeah, please proceed. We are hearing. We are able to hear.
Yeah, I can tell, madam.
Yes, sir. Please tell me.
If I invest an amount in SBI,
okay,
that is like SBI Life, like that. That money was kept in high risk and low risk for the market, share market.
Okay.
Even there is a problem that we lose our money, our invested money also. Either about interest or higher amount, higher deposit, higher backup.
Okay.
But we lose our whatever originally invested. Why it happens like that? That I want to just know, madam.
Okay, sir.
If it is a market related insurance thing, then your return depends upon the market conditions. Sometimes the unit value may be less than the face value also. So the NAV of the unit, it may be less than the face value of the unit. So that risk is there, because
that will be fluctuated
if the market is falling, your investment value will also fall. If the market is rising, your investment value will rise. So unit linked insurance policies have that problem.
Okay.
So primarily you need to make the difference between investment and insurance. This we keep saying people that both these things are not same. If you are talking about insurance, it is basically taking care of your risk, the worst possible event happening. The second one is investment, where you want some substantial return out of that. So traditional insurance policies will not allow you, or traditional insurance policies will not have a share market exposure. Whereas the, like sir was saying, is you would take the unit linked policies and others. You have a choice there. If you are not interested in that, you don't put your money in the growth funds. You better put it in something which helps in government securities and all, which is much more safer. So please make the difference between insurance and investments. Both these things, don't combine them, then you'll have this problem of NAVs going much below the face value.
Okay. So we are discussing the features of Indian money market.
Yes.
Yeah.
Yeah, basically in the Indian money market has developed over a period of time. You have lot more players coming in. FIIs are also allowed to invest now up to a limit of $25 billion. So from the government point of view, we have government securities and treasury bills which are very active, very liquid. You also have, from a company's point of view, you have commercial paper, factoring, forfeiting, all these, but what is the relevance of all this? From a bank's point of view, you have certificate of deposit, call money, notice money, and all that. The most important function is that immediate requirement of money is what the short-term money market takes place. So you're always thinking about long term, but during the banks, during their fortnightly period, they have to make up for the SLR and requirement which is there. So on the reporting Friday, they might require a huge funds in order to make that. So the call money market helps them to fulfill this requirement. Whereas for the government also, in terms of immediate requirement for salaries and others, short term requirements, so it does play a very important role. And it is the starting point of deciding on the interest rates for the long term period of time.
Okay, sir. So while discussing, while responding to my first question, you said that financial services is another important component. So I request you to say something about what are the financial services offered by the financial system.
No, before explaining about the financial services, I want to add another dimension to what Professor Dr. Satish has explained about the features of money market. Now this call money market or the short term money markets, they open up a window to the corporate sector also for very very short term financial needs. For example, this commercial paper. So that is so they need not go to banks for meeting their working capital needs, and so like that. So this gives an idea to us pertaining to financial services. The idea of increasing the financial services is to bridge the gap between the saver and the person who is in need of money. So the more the number of services that the financial system offers to the savers and also the persons who take the money, who require money, so that will bridge the gap between the people who save and people who invest in the financial system.
Okay, Prof.SV, I am afraid the time is over. Still, I think there are so many other aspects to be discussed about, like we started discussing the financial services and financial institutions, another important segment in financial system, like this different types of development banks which provide particularly which are meeting the requirements of the industrial sector
for long-term
purposes. So thank you very much, sir, for sparing your valuable time and being with us in our studios and for enlightening our students about the financial system, its components, what are the various major activities of the different components of our financial system. Thank you very much.
Thank you.
Thank you.